Welcome, everyone. My name is Matt, and this is Walking the Financial Highline with Highline Financial Coaching. I'm excited to be here tonight. We have some great topics that we're going to talk about in the banking world. These are some of my favorite products to utilize with a bank, whether you're trying to grow, pay off debt, get into real estate investing, buy a business. There's a lot of different ways that you can prepare yourself financially utilizing the products that are at a bank. So hang in there, hop on, and let's get started. So today we're going to talk about lines of credit, HELOCs, mortgages, and refinances. So the first thing we're going to look at is lines of credit. What are they? How do we utilize them? So think of a line of credit as a safety net. It's a financial cushion that you can tap into whenever you need it the most, whether it's covering unexpected expenses, funding a home renovation project, or bridging a gap between paychecks. A line of credit gives you access to funds on an as-needed basis. And the best part, you only pay interest on the amount that you use, making it flexible and cost-effective for a borrowing option. Also, the benefit of a line of credit versus a loan. On a loan, when you pay money back and start paying it down, you can't access that money again. Where a line of credit, you can pay it down, you can utilize it again, and most of the time, lines of credit are going to give you a better interest rate than a credit card or some other lending options. So if you have the opportunity to get a line of credit for your business or your personal use, it's a great opportunity. So there's also a couple different types of lines of credit. There's secure lines of credit and unsecured lines of credit. So my favorite are unsecured lines of credit because you don't have to tie any of your assets to that. The bank takes on the total risk and you don't have to associate any assets with it. Now, to get unsecured lines of credit, you've got to have a good track record with your credit score, with paying credit back, because a bank's not going to take on that risk unless you've got a proven track record that you're going to pay it back. Another option, if you've got a lower credit score, you're a business owner, you're trying to build back, are secured lines of credit. Now, secured lines of credit have assets associated with them. You can also tie cash to lines of credit. So if you've got a big job that you did at work and you get $10,000 or $20,000 or $30,000 in, you can go to the bank and use that cash as collateral to be able to open a line of credit. Now, a lot of people might be saying, well, Matt, that's stupid. I've got the cash. Well, if you're trying to build your credit and build up a good reputation with a bank, this is a way for you to show them you've got the collateral and you can lend from that. And the bank that helps build your credit score. They report that to the credit bureau. And it helps you build and establish that credibility with a bank. So hopefully down the road, you can go back to the bank and they will give you an unsecured line of credit and you can get all of that cash back and utilize it in a different way. So there's some great options with lines of credit. Lines of credit are a great way to swallow up some of your debt. If you've got high interest credit cards and you can get a lower interest line of credit, you can swallow that up and drop the total interest, the liability that you have, and pay much less in interest, which makes it a lot easier to pay that total balance down. At Highline Financial Coaching, we show you how to utilize those correctly and disciplined enough so that you don't get in trouble utilizing these things and dig yourself into more and more debt during the process of your improving your finances. So we talked about lines of credit. A great line of credit is called a home equity line of credit. And the acronym for this is HELOC. And so HELOC is another secured line of credit where they actually utilize your house as leverage to be able to get more money. So if you've got a house that you've lived in for the past 10 years, you've built up a good amount of equity into that house. And that's a good thing. That means you've increased your investments. You've increased your total net worth. You're investing in real estate. You've got a tangible asset that you've got to live in. And a home equity line of credit gives the bank more security because they're going to base it off the value of that house. So if you were ever to default on that and not be able to pay it off, the bank can be able to utilize that house. So it can be more risky if you're not able to pay it back. But if you're utilizing that to pay off credit cards, utilizing that to open a business, or if you've got one of those in place and you have an emergency, like a medical emergency, or if you lose a job, you've got that equity in your house that is yours to be able to utilize that before something catastrophic happens. If you don't have a home equity line of credit in place and something happens and you missed a house payment and another house payment, the bank can take over your house, sell your house, and make all the money that you had gained in equity. So that's a great way as well to be able to utilize the assets that you have available. And the good thing about a home equity line of credit, you can utilize that to buy other investment properties. It's a form of it's a form of money that you can utilize as a down payment for another property. So they're great ways to really, when you learn how to use them correctly, they are a great way to grow your assets and increase your net worth. So I am going to throw out there some caution. You want to be able to use these correctly. Do not get a home equity line of credit and go out and buy a new truck and a boat and blow it. Go on a family vacation. You still are paying interest on that, and you still have to pay it back. Because again, this is a line of credit that the bank has leverage against if you fault on it. And the last thing we would want with anyone is for them to go out and blow all of that money and not have anything for their future. So there's my warning with these products. Also, I want to talk about mortgages. Mortgages are the key to home ownership, and they help people achieve those dreams of owning a house. A mortgage is usually used to purchase a home, and it's typically repaid over 15 or 30 years. Those are the typical amounts of time that people repay those. With a mortgage, you can become a homeowner without having to pay the full purchase price of the house. And the good thing is, if you're a first-time home buyer, you don't have to come up with as much of a down payment to be able to get into the house, because there's programs out there to help you get into the house. But a typical down payment on a house can be about 20%. There's programs that you can do it for 10, 5, or even 3, depending. And then there's also some programs like VA programs or other associations that you might be connected to that have different types of loans that you can access through them. Now, last but not least, we're going to talk about refinancing. Refinancing is a very powerful tool for your existing mortgage. Let's say you get into a house now, mortgage rates are anywhere from 6 to 7.5%, and you get in now, and in a year, the mortgage rates drop down to 5%. It may be beneficial for you to go and refinance your house at a lower interest rate, because you might be able to save 1, 2, or 3%. And over the lifetime of a mortgage, that can be thousands and thousands of dollars by refinancing. Sometimes you may need to refinance and do a cash out option. That's also a good way to swallow up some of your debt that's at a higher interest rate. It's a good idea if you're going to pay that down and get it down as low as possible over time. So there's a lot of things that when you understand how it works properly, they can be a huge benefit for you when you're working with a bank and your financial management. So if you have questions, go ahead and comment on these videos and we can address those, or we can take a look at your finances and go over it and see what position you're in. So why are lines of credit, HELOCs, mortgages, and refinances so important? Well, all of these together are like the Swiss Army knife of your financial toolbox. They offer flexibility, convenience, opportunities for financial growth. Whether you're funding a major expense, purchasing a home, or optimizing your existing mortgage, these financial tools are here to help you manage your finances and achieve your dreams with ease. And if used correctly, these things can help build your net worth at a much faster rate than you could without them. And there you have it. There's your crash course on lines of credit, HELOCs, mortgages, and refinances. By understanding how these financial tools work and how they can benefit you, you'll be well equipped to make informed financial decisions and achieve your financial goals. So go ahead and unlock the powers of these financial tools and embark on your journey to financial success. So if you found this video helpful, please like and subscribe to our channel so that you can get some of our other videos. We still have a few more this month that we're going to be going over banking, some of the benefits, some of the downfalls of the banking world. And next week, we're going to go over more of how banks work. How do they function? How do they lend money, give it out? How many times can they lend money? So my name is Matt. Thank you for joining us for Walking the Financial Highline with Highline Financial Coaching. Have a great day.